What is up, responsible day traders? Today is Sunday, November 20th, 2022. I am Lindsay Duff, and this is Responsible Day Trading. I have had all kinds of problems with my recording. I actually just started a video and it stopped on me. I had a really big problem last week. I wasn't able to record. I did get it fixed, but it was a 40-minute video that was just junk and you couldn't even see anything. So we just skipped it last week. By the time I got it fixed, it was too late, yada, 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 all that jazz. So let's talk a little bit about what's going on this week. We are coming into the holiday season, or we are in the holiday season. Thursday is Thanksgiving. The market will not be open then. So, we don't want to be too presumptuous that things are going to go as far as we expect them to. If you're getting into trades, be very cautious. If it's showing a sharp turnaround pretty quickly, pay attention to that. Don't expect it to go to these high heights that we would normally see, because a lot of the big players are not in the game right now. A lot of them have stepped away for holidays and all that kind of stuff. So just pay attention to what's going on so that you can make sure you are protecting yourself. Also, we did have the scholarship recently. We did take on some new students. They are doing amazing in their homework, and I'm really excited to see it. Guys, I'm happy to have you here. We do have a couple of openings still left, so if you're interested, reach out to us at info@responsibledaytrading.com, and we'll be happy to answer any questions that you have and help you out. But let's go ahead, check out the market, and see what we got going on for this week. So I did add the news in my first video. I forgot here. You can see we got FOMC this week, and we've got some holidays going on. So be sure you're aware on Wednesday. Be out 30 minutes before and 30 minutes after FOMC. All right, responsible day traders, let's go ahead and pull up the daily chart first. I'm just kind of watching my recording, making sure it's not turning off. Okay, so let's talk a little bit about what's going on right in here and what's going on with the MACDs. So we had a nice big move to the upside. So actually we're going to start back here because we didn't get to talk about it last week. I did, but you didn't hear it. So when this pulled back so deep like this and it rolled off the zero line, great indications that this area wasn't going to hold and we were going to push back up. It does push up towards the EMA, and now we're just kind of hanging out there. So we had the reversal bar down, we have the reversal bar up. We have MACDs still blue, even though they're weak and starting to roll inside just a bit. They are still blue. What we have to ask ourselves is, are we going to see something along the lines of this? We saw a reversal bar up, a reversal bar down. It hung out this space, and then it popped up. So if we hang out in this space and then pop up, we're going to be seeing probably something similar to this. We're going to need to see a lot of strength in the MACDs to really push this up higher, and we're not too far off from some of the high pivots that we've seen here. So if we push up there, I'm gonna kind of expect it to at least pull back, if not push up higher. Now, something that it could do is pull back towards this EMA, which will have the tendency to come up a little bit more, maybe greet it right back in this area right here where we had an area of resistance turn into support. So we're just gonna have to watch it, see what happens with these BBs. If they don't look like they're gonna have the chance to drop and cross that bottom Bollinger Band, well, then I'm gonna expect this to continue up a little bit further, maybe into this area of resistance that we've seen hit several times right in that area. So, while the current market is pushing down, and we'll look at that more in just a minute, I do tend to expect this to show us what it's shown in the history in the past, which is hang out for just a little bit and then push up a little bit more. But let's go ahead and take a look at the 28,657 and see what it's telling us. And it's really not telling us a lot different. Now, what we do see here is price has pulled up. It hasn't reached this previous pivot, but it has pulled up a lot more than the MACDs. So we do have some retracement divergence going on here, which means the price is leading lower than the MACDs, even though they've both pushed up. Now, something interesting to look at is we had this nice big strong move to the upside, and then we got back below these EMAs, and these EMAs could never spread open and push down at this point. So this is another reason that I'm kind of anticipating this to push up. I mean, it could change in the blink of the eye, especially with what we have going on with the holidays here right now. So just paying attention is going to be key. I mean, it always is, right? So maybe we see this pull down here and then push up and continue up, or heck, maybe this just starts to roll up. But right now it's weak and it's inside. So it's hard to say that it's going to push up from right here, right now. I mean, we may even see an M pivot that would pull it back down towards this area. If that happens, these EMAs are going to roll over and start opening up to the downside. They've had such a struggle because as soon as we got below it, we got inside, we got above, we got inside, we got below, we got above. So that's why those EMAs are staying flat and weak. When we're back above them, it pulls them apart and opens them up, showing us that strength and momentum. And we don't have strength and momentum in either direction right now. But that's a good thing, because whenever it slows down like this, eventually it's gonna pop. Okay, so let's look at the immediate market and see what we've got going on here. All right, so when we come over to our 10,946, we can see that, and let me turn this off, we can see that the price pulled up to that top Bollinger Band, and it did look like this bar was going to break through because it was pulling up there in blue when it first opened. As we can see, that didn't do much. I mean, we're an hour in, and I believe we're still on the first bar. On the 10,946, we may be on the second or third bar. But this was the first bar here on the 1597. So yeah, we're still on this first bar of the 10,946, which, whenever it opens, we always, I know y'all don't see it, but my recording is still having issues because it just stopped in the middle of it, but we're back. But when it opens, we always see a big spike. And so it's very normal whenever the market opens is to see this big spike. And that big spike isn't always indicative of a move in the opposite direction or in that direction either. It's just that big opening spike. Everybody had their orders waiting. Boom, it picked them up. And then now people are playing in the game. So now people are making it move. Now, let's look at what happened here, okay? Like I was talking about, this BB was blue and coming up. It did look like it was going to break through that top Bollinger Band. Well, now it's sitting at the bottom Bollinger Band. And typically we would say, okay, well, it's going to push through, or it's going to hold there. But when we're looking at that 1597, currently those MACDs are really, really working hard to push down below. Now we can see they are pushing down below. We have equaled that previous area, and we haven't had a lot of movement down below so far in this new push that's happening on the 233. So is this area going to hold and push it back up, or are we going to see ourselves pushing through it? Currently, it's looking like it's really making the attempt to push through it, but we're just starting this bar off, and this BB right here could really pull back in and kind of squish back into that area and push up. It's going to be a bit of a fight all week. So if I was going to go along with these short trades, I would have had to take in something back here, which we can see is now a 3-point difference, a little bit bigger than we want to deal with when it comes to risk versus reward. As we watch through this bar, if this strength continues picking up, we're probably going to see this BB drop and get back below the bottom Bollinger Band. I just wanted to come back really quick and take another look at the 28,657 to kind of remind myself the BB's just turning purple and starting to come inside. So this is a viable area for it to kind of hold and bounce back around in between here. We already saw a reversal bar come down, didn't push it through. We're seeing another one making the attempt here. Are we going to see a double bar pushing this through? Are we going to see this just hang out at this area? Now, I cannot stress it enough that during the holiday season, everything slows down. I mean, this is even slow for an opening, right? And I say that because we're still on our first bar on the 10,946, and we've been open for over an hour now. So, unless you're really prepared to take it slow, breathe through it, unless you have a lot of patience, I would be careful with this. I would be careful with what it can do, because it can really, as I like to say, eat your lunch if you're not paying attention to what it's telling you. And so right now it's telling you in the immediate that we still have strength down. But remember, this is why we use the tick counter. There's still 1,200 ticks left here, and this could hold out here and push up. So I'm just going to be very patient and wait for things as we're going through. Patience is and will be the absolute key. If you decide that you have to trade during this time, just take a minute, breathe through it, pay attention. Don't try to force anything, because that is what is going to really hurt you. What's really going to take all that money out of your account that you're putting in there. And we want to make money instead of losing money, right? That's the idea with all of this. And we can't do that if we're trying to force things. And I cannot explain that enough. And that is like the biggest thing that I talk to students about is when you're trying to force things, you're going to take trades that are not viable. You're going to be thinking about the money and not the right thing to do. And when you're thinking about the money, you are making up trades. There's no way that you are taking trades that are by the book per se. So really just paying attention to what it's telling you. Is it slowing down? Isn't it giving you an opportunity to have low risk? Do you have room to run to the next area? Is the next area anticipated to hold a break that you're at? I mean, all those kind of things need to be going through our heads as we're taking trades, not just, this bar looks pretty and I think I want to try it. It's not a click it and say a prayer method. That does not work in trading. I'm sorry. You need to click it and have confidence. And even if it doesn't work out, having confidence that you did the right thing, having your risk in the right place, and knowing when to get out if it's going against you. So, all things to keep in mind. Don't forget about FOMC. Pay attention. Take a breather. And, maybe take a few days off. Just whatever. Remember, FOMC is here. And guys, just that 30 minutes before and 30 minutes after is usually my suggestion. So for that hour, just sit out and just let it do its thing. Unless you are really prepared to be quick on the draw and just, you're very confident in your trading style. So, all right, guys, that is going to wrap it up. I hope that everybody has a wonderful holiday week. I love you guys so much. I appreciate you being here with me. And as always, you know that I look forward to catching you on the profitable side.